Hey guys, Akil Stokes here. Welcome back to another Weekend Trading Edge video. I've got 7 new trading opportunities to take a look at this week, and I promise that it won't be as long as the previous Trading Coach podcast episode that I put out that may have accidentally been an hour long. Also, I've got a story to tell you about a trader who started off the year really bad, and then somehow I dug myself out of that hole with a 9-trade winning streak. I mean, he, them, they, it was me. All right. Anyway, before we hop into the charts, let's talk about 2 things to pay attention to this week in the market, or 2 things that have been moving the market. One, we ended the week with the Supreme Court decision saying, Trump, your tariffs were illegal, be gone. And Trump fired back with his cheat code that said, okay, they'll be gone, but that 10% worldwide tariff that I have is now going up to 15%. So take that, at least for the next 150 days. So the market is going to be kind of dissecting and kind of understanding what role that's going to play in everything. But that's going to take a back seat because more importantly is the fact that we are still not at war with Iran, but threatening and sounding like probably going to strike Iran. And that's a little bit more important than the tariff stuff right now. So those are 2 things that the market is going to be on edge about this week, especially if something were to happen over the weekend before the open. Now, speaking of the open, let's open our charts and take a look at some trading opportunities for the week ahead. So let's get started on the pound dollar this week, and I apologize in advance. I'm very zoomed in this week. I hit a button on my camera, and I'm very bad with technology, so I don't really know how to fix it. But please don't let this up close and personal view of these gorgeously handsome looks distract you from what really matters most, the charts. And on pound dollar, we have a very deceiving chart. Now, if you've been with me for any of these videos, you know I like me some advanced pattern formations, and this is probably shouting out to you, got one, got one, got one. And yeah, it looks like we do, but we actually don't. You see, advanced pattern formations have rules, right? One of our 20 trading lessons, follow thy rules. And rules are meant to keep us out of trouble. And although this looks like the natural ebb and flow of a beautiful pattern formation, it actually is not. You can see when we take our Fibonacci retracement from our swing low here to our swing high there, we are going to line up with a 618 Fibonacci level right here in the middle. That particular Fibonacci level is going to put us on alert for what's called a Gartley pattern. Now, for the C leg, right, if this is X and this is A, this would be B. For the C leg for a Gartley, I need another 618 Fibonacci retracement to be hit. And as I drag that Fibonacci on from our swing of high to swing of low right here, you're going to see that we don't actually hit it. Now, you could say close enough, but you could also be a rule breaker, and that's not something we want to do. The fact of the matter is my rules are black and white. If it hits the 618, boom, we have a valid C leg for a Gartley. If we don't hit the 618, we don't. So this would not be a valid Gartley. Going through that checklist keeps me, helps me avoid breaking my rules. And now my next job is to hit the right click button, hit remove drawing tools, and start over. Now, despite this not being a potential Gartley, there is a potential pattern formation here. And this is going to be a simple pattern, and it holds a very special place in my heart because this is something that I started off trading and really fell in love with as a new trader before realizing that I wasn't disciplined enough to actually trade it without making mistakes. But once I did become disciplined enough, I went back to it. And this simple pattern formation is going to be an AB equals CD pattern. You see, an AB equals CD pattern is one of the simplest patterns to identify because all we have to do is 2 things. We have to be able to draw a line, something that many of us learned when we were very young, and we have to find the copy and paste button on our mouse or on our keyboard in order to duplicate that line. So here's what it looks like. I'm going to take my line tool and I'm going to draw a straight line from here to here. That's going to be my A leg to my B leg. I'm then going to copy and paste, or just right click this and clone it, right? And drag it on to the retracement that came after that move. And then this is going to be my C leg right here. Draw an imaginary line right there. There we go. That's horrible. It's all squiggly. And this is going to be my D completion. And when the market is moving harmonically, meaning with a natural flow and movement to it, we see these equal measured moves, meaning we see the market put in similar types of ranges between extensions and even similar types of ranges between retracements, right? It's called harmonic movement. This is kind of the inside part of the harmonic patterns. Now, unlike young Akil, who just simply put an aggressive limit order on every D completion and said, let's go, baby, and then proceeded to lose a lot of money and scratch my head wondering why, I eventually learned that an AB equals CD pattern by itself isn't enough, but when we combine it with other things, it can become very powerful. And that's kind of the whole premise of the CTS system that I always talk to you guys about. And if you guys are new, which I realize many of you are, and I have to keep reminding myself that each day instead of just referring to old stuff, the CTS system stands for the Combined Technical Score System. Pretty much what it does is it takes different technical elements, AB equals CD being one of them, and allows you to combine them into like a system that you can quantify and judge good versus medium versus bad trading opportunity. So what I would look for in this particular opportunity is this. I have my AB equals CD. Let's type this at the top. AB equals CD. That's one thing, not minus, but that's supposed to be an equal, but you get it. What else do we have here, right? Play the game with me. Try to pause the tape and guess what I'm going to say before we get there. Look left, structure leaves clues. There should be some eyeballs here. There we go. Look to the left, structure leaves clues. So we could add previous structure to our equation. And then we can kind of do some advanced future analysis, right? Where we guess what else can happen down here. Not a lot of things can happen down here, but just to name a few things, right? We could have the RSI go oversold, right? That little squiggly wiggly at the bottom of our chart. This can go down to the 30 for traditional RSI users, or the 20 for me. We can have a double bottom, which is a retest of structure. We can even have like a volatility band being hit or closed below. If I just add up or load up, let's go a Keltner channel, for example. There we go. That little dark blue line, which is probably hard to see, that's going to be a Keltner channel. We may have price action probe or even close below that. The point is, right, what we're doing is we're looking for price action to come to this level, and then we're looking to add the different clues together for an opportunity to go long. Next up is going to be the dollar yen, and the dollar yen was really, really good to me. I think I shared with you guys this video of the stop and reverse. I did, but the stop and reverse played out perfectly. If you guys remember, Akil bought right here on this beautiful candlestick combination. Look at these three candles, a 3-bar reversal. If I ever saw one, beautiful. I can't get the right thing to work. There we go. Boom, right there. We bought it up to our 183 even handle, where we ran right into a bat pattern up here. It was, I believe it was. Let's go. Come on, Akil, we're so sticky today. Here we go with our bat pattern, and then we retraced right away from that bat pattern and hit targets down there. So we won on the way up. Yay. And then we bravely and scarily got involved on the way down and won again. So a good way to end the week. Now, I'm still in this trade, but there is more to, or I guess a second chance opportunity. So if you guys remember, the bigger premise for this trade came from the violation of structure. The bigger idea was, hey, if we violate the structure, then we're likely to go higher. So if you guys saw the 20 lesson video, I talked about a very simple process to, I think it was a 20 lesson video, it might have been a different video, but no, it wasn't a 20 lesson video. I spoke about a very simple process I do as far as like identifying structure and making predictions, where pretty much I like to identify 4 levels of structure, 2 of the most recent levels of structure, and then 2 of the next level of structure. So this was at the time one of the 2 recent levels of structure, and then up here was our higher level of structure. And pretty much we said, if price breaks and violates this level, then we're likely to continue there. Well, you can see that price did violate that level. We got a nice little pullback. And has anything happened that caused this trade not to still be valid? No, right? It's still doing what we thought it would do, right? So this is still a valid trade, right? Now, I would personally, if I were you, wait for a fresh break, meaning don't try to get involved right now, but wait for a little bit more confirmation by a fresh break of these highs. And then if we can break those highs, you can still look to trade it up. I'm going to steal a line here to this next zone, either trading it straight up like a breakout trader or doing what I did and waiting for a pullback and then looking to catch that next extension up. So although this was a grand and glorious trading opportunity, and hats off to all you tier 1 traders that took advantage of it, there is still a trading opportunity here because the bigger prediction is that we're still likely to go up to that 84.50s area. Now, another past opportunity that we looked at in last week's Trading Edge video, which worked out perfectly, but still has meat on the bone, I'm going to regret doing that, is the pound Aussie. If you guys remember pound Aussie, we were looking for a continuation opportunity. Price action had violated a low right here. Let me mark that up. And we're looking for a move to another low down here. And as we zoomed in, we took a look at a very, where are you at here? A very cool pattern situation on the hourly. Sorry, I'm old and forgetful in my age. And we said, hey, we've got this awesome potential cipher pattern forming X to A to B, B to C, C to D as a bearish cipher. And that bearish cipher goes hand in hand, however you would do it, with the continuation trade, meaning that our bigger prediction, right, was a bearish continuation, and we happen to have a bearish cipher that came within that bigger bearish continuation trade, right? So the whole like Russian doll thing, I'm looking for something to put something in, but we had a bigger prediction here that said bearish and a smaller prediction that was inside that bearishness, which means they were both lining up, which offers an opportunity to eat more meat from the bone or to trade it short for extended targets, however you want to phrase it. And you can see it did just that. Now, again, there is still opportunity here because what we did was we put in a fresh break, originally right here below the C leg of the cipher, but as the week went on, we got a little bit lower here. And just like we spoke about with the euro yen, that fresh break resets the opportunity because we're still looking for price to go lower, right? We can still go lower to this 189.60, 189.50 level, or even if you're a little bit more conservative, the 190 flat level. So we have that fresh break. If price action were to give us some relief and a little bit of a retracement back, this is an opportunity to catch on the next wave down and trade it down to those next lows. So again, something you need to keep your eye on because this one still has opportunity on it. Next, we're going to take our weekly stroll on the gold market. And we did a podcast this week talking about safe haven assets and comparing the safest of the safe havens, specifically in the currency market, and pretty much talking about how all of them had their flaws. Well, that's why gold is so exciting, and that's why everyone is rushing towards it, because everything else stinks. Now, I did expect gold to take a little bit of a step back after the tariff news because that would show certain signs of maybe a stronger economy. But we have the Iran news, which is the war, which I suppose trumps that other news. No pun intended, I promise. And as people panic or deal with uncertainty, they go back into gold. But if you haven't seen it already or listened to it already, make sure you check out that podcast. It's a good one for whoever is curious about what safe haven assets are and why the chosen 3 or 4, or someone keeps trying to convince me that euro should be the safest of the safe haven. Not going to agree with that. Why they are what they are. But what we have on gold here is 2 things, and this is going to follow up on pretty much months of analysis that we've already done, but why not? Bigger picture, we have a potential advanced pattern formation. I think it was a bat pattern. It's been a while, but yes, we have a bat pattern, meaning we have an initial swing high to swing low being our X to A, a retracement right here being our A to B, a failed extension to the downside being our B to C. And if price were to travel to this 886 Fibonacci retracement, this would give us a completed bearish bat pattern, which is a selling opportunity. Now let's keep this level in mind because we also have a structure trade here on gold as well. And that structure trade is going to come right at our B leg or a little bit above it as we take this little wiki area into account. But pretty much going back to Akil's simplified way of trading structure, $9.99, 5 easy payments, whatever the thing used to be. That'd be very cheap in today's economy, 5 easy payments of $9.99. Whew, I'd buy all of it. But anyway, if we can violate this current level of structure, then I expect us to travel to this level of structure, or this price level. So if we can violate this level, just like with the pound Aussie, look for and the euro yen, look for continuation opportunities up to this level. Then if you want to get fancy, you can stop and reverse. But if you're a gold investor, you probably want to stay out of the bearish move and just lock in a cheap price on the bullish move. Now, since we spoke about gold, it's only a must that we talk about silver, gold's cheaper equivalent. Silver, last week we spoke about a key level that I was looking for price to go to if we were to go higher. That key level has remained the same because nothing has happened since last week. But we do have some cool things to go over here. One is going to be the presence of a potential butterfly pattern, right? I'm going to draw this on quickly because, again, I don't want this to be another hour-long video. But because our B leg right here comes deeper than that 618, and in this case it comes to a 786 Fibonacci retracement. It's not going to look like it, but trust me, it does. Oh, it does look like it actually. That's going to invalidate the Gartley pattern, and it's going to put us on alert for a potential butterfly pattern. And the butterfly pattern completes above the X leg, which is a little bit weird and something I don't really like. But in this particular case, that completion point is right at the zone in which we're looking for price to come to and stall anyway. Now, just like gold, if we can violate the highs here of the X leg, my expectation is that we would go to this level right here. But another option is this, right? You don't necessarily have to trade it up to the butterfly. You don't necessarily have to trade it down from the butterfly, but if you are looking to get long silver, the whole psychology behind a butterfly pattern is that price breaks out from said level, we rally up, and then we get to a point where we get a little bit of exhaustion and we get relief, meaning a pullback here before rallying up again. So if you're someone that is not interested in buying silver now because there's no technical reason on the chart to buy it aside from a head and shoulders pattern, let's save that for a little bit later. You can look to buy it on not the next move and not the move after that, but the move after the move after the move, meaning wait for price to give you some confirmation of the violation of this leg, screaming bullish, wait for price to get to an exhaustion point and give you some relief, and then look to get on here at a cheaper price point. Now, that I see this, I didn't mean to pause there, but we did have a head and shoulders pattern, and we do have a completed one if you are a slanted trend line trader. So let's measure out the head and shoulders. Head and shoulders is a classic reversal pattern. It looks like this: directional move to the downside, retracement up, shallow extension to the downside, failed move back up, and then retest back up, and then a failed move to the downside. Now, me personally, right, we've had this discussion before, so I won't harp on it too long. I look for horizontal structure, meaning I need price action to break the peak of this level to violate or to validate the head and shoulders. However, if you are a trend line trader, then you're looking at this slanted neckline, meaning a neckline connecting the left high right here and the right high right here, and you're looking for a break and close above that. And as you can see on the chart, you have that. So you can always wait for a pullback into that level and look to trade it up from there as well. Euro dollar is next. Euro dollar is going to be very similar to the pound dollar, so I won't spend too much time on it, but I did get a request to look at euro because it's the most popular pair out there. But again, this looks like an advanced pattern formation, but we do not hit the requirement on our C leg, so it's not. But if we take an equal measured move from this swing high and just put it down here, that's going to give us an AB equals CD pattern right at a previous level of structure. I didn't do this before. I should have done this on pound dollar, but we can also get confluence by bringing out our Fibonacci extension too. So if I take my Fibonacci extension tool from the swing high to swing low, the A to B, and back up, we get a little bit of confluence down there. We have a 618 a little bit lower right at that zone. I'm just curious to see what that would have been on the pound dollar now that I think about it. I don't know why I didn't do that, but let me just see what this looks like. Yeah, no confluence there either. Maybe I secretly knew. So you have a 127. You can make a zone between the 127 and the AB equals CD if you want, but we would love to see one of those Fibonacci levels line up directly at that AB equals CD pattern. That would be awesome. So we've got that on Euro. And then again, something you could do here as well, we didn't mention that, is that one, you can wait for said reason for entry here, whether it's a higher high, higher close candle, something like this, whether it's a double bottom, something like that. Or if you want to be more aggressive, you can do something like this. If price action enters this zone, I would start this zone at the 116 even handle right here, right? That's good confluence, by the way, right? If price action enters that zone, then drop down to a lower time frame, and you may be able to look for a lower time frame reason for entry, which would come quicker than that higher time frame one, just simply because there's more candles in a lower time frame than a higher time frame. Lastly, we got cool things happening here on the dollar Canada. A few cool things. One, we do have a potential advanced pattern formation. Once again, if I start my pattern with my swing high to swing low, this is going to be my X leg to my A leg, and I take out my Fibonacci retracement and measure that move. You're going to see that we come into a 50% Fibonacci retracement. Just as we mentioned with gold, a 50% Fibonacci retracement puts me on alert for a potential bat pattern, which would give me a completion zone starting here at our 886 and going to the high of our X leg. This would be a sell. If we go down to a lower time frame, we're going to pop back up to a higher time frame, but I want to get the pattern stuff out the way first. If we go down to a lower time frame, we have a different X to A leg, right? Which is going to look from here to here, which means it's going to give us a different Fibonacci retracement level. And similar to silver, this is going to give us a potential butterfly pattern. So this is going to look something like this. Swing high to swing low, X to A to B, B to C, and a decompletion for a sell right up here at our 127. Now, as a structure-based trader, here's something else you can look for, and I'm going to delete this stuff so I have room. If price action can violate this level right here, then my expectation is that we're likely to go higher to either the bat pattern level or this previous level of structure right in here. Let's just see if there's any volume in there that gives us a bigger look. Pretty much the same across the board. But anywhere below 139s, I would say. I definitely wouldn't aim above that. So we can wait for price action to potentially violate this level, either on this time frame or a lower time frame. If you're a breakout trader, as always, break it out. If you're a pullback trader, wait for that pullback and then look to catch that next extension. So before I let you guys go, I want to talk about that trader that started off the year with a dumpster fire and then somehow clawed his way out of it with a 9 trade, I think, heater. Yeah, it was me if you couldn't tell. And I shouldn't call it a dumpster fire because I've had much worse starts to the year. There was that infamous start to the year between, actually I think it ended just around this time where I was at like 17% in the red, negative 17% in the red and contemplating life. This year, I started off a little bit choppy, and then as January went on, it just got worse and worse and worse, but I double bottomed and found my footing at about like 5% or 6%, something like that. But the cool thing about that is that we have stuck to our plan. We have done the things that we were supposed to do. We didn't panic. We didn't ditch any systems. We just steadied the ship. And now I'm up to a whopping 2% return on investment for the year, which a lot of you guys are shaking your head saying, Akil, why the hell would you be happy about a 2% return? I'm supposed to get a 2% return every hour on the hour. At least that's what the internet tells me. Well, again, it's not just a 2% return. It is a 2% return after being down about 5%. So February has been about a 7% year, 7% month already, which is extremely good. So yes, I'm happy about that. And you got to keep in mind, it's only February, right? We really don't judge ourselves until the end of the year because we're going to go through hot streaks, we're going to go through losing streaks. But while I like taking you guys through this journey, and you guys know me, I am not about showing equity curves or return on investments or anything like that because I want you guys focused on the process, not the profits. But I always think it's a really cool story when you can see a professional trader start out really, really poorly, situations that many of you guys start off in, but instead of bail and ditch and panic and do something different, just do what he's been doing, understand that time is on my side, and you can see that eventually you can dig yourself out of drawdowns, not by doing anything different, but by just following the rules of your plan and understanding that things take time. So I'll keep you guys updated on the journey. If ever anything fun happens, I'll probably be break even for the end of the month if that's just how it usually happens after hot streaks, but wanted to share it with you just because as a newer trader, I would like people sharing that stuff with me. All right, if you like this video, hit that like button, subscribe if you're new. If you're interested in any information about trading computers and all the cool stuff that goes into it, whether you're looking to buy one or build one yourself, check out this free online trading computer guide. And also mark your calendars for March 17th. Maybe we have another trading workshop coming out. Once I get confirmation on those dates, I will let you guys know in every podcast and video that I put out here on YouTube. All right, till next time, plan your trade, change plan. Take care.
I wanna be the best in the
Kept
game.
it under an hour.
No restraints, I'm obsessed with the pain. I ingest, I retain, assess and I change. Possessed by the thought I'll be free one day from society's restraints. Money, clout and fame, mud, disease, a plague. We all love to hate, have to play the game, have to make a name. All our insecurities are on display.